Hey folks, welcome to InTheMoneyStocks.com market correction analysis. Let's get right into announcements, get those over with so we can get right into this market discussion here. And we had quite a bloody day again, and we'll go right into that and how the technicals yesterday showed us this was a possibility for today. And it now has triggered a cascade effect that's going to take us down 60 to 80 points on the S&P. Alright, but first announcements, guys. One is the intraday stock chat. Amazing chat room. It's for day traders, swing traders, and people just wanting to learn about the markets. Alright, we go over technical analysis, level 2, market psychology in there. In addition, we talk about trades, we give our trade calls. It's a wonderful chat room, very inexpensive, basically a month-long seminar on trading. Can't go wrong. The other is the swing trade alerts. And we called out a trade on something yesterday. I can't divulge it, but basically today with the bloodbath, right in the money. It was a great short. People made a nice chunk there, and wonderful trade in one day pretty much. We're almost out of the position. We probably will move out and cover the position tomorrow when our target is hit that we called for the target. So a great product, swing trade alerts. This all can be found on InTheMoneyStocks.com under swing trade alerts and intraday stock chat. The other thing I do want to alert everyone is we do hedge fund consulting. We do private equity consulting, and we consult money managers. You name it out there, we're there to help. We are there to direct the big money as well as the small guys. We fight for the small guys, but we're there to advise as well because we don't like to see anyone get hurt in this market. And we basically just said where this market's going for the past month now. We were calling this even before this happened, and you can see that on our daily report archives on our website, InTheMoneyStocks.com. All right, let's get right into this, folks. Well, what happened today? Let's talk about yesterday first, and then we're going to move into today. Yesterday we had two scenarios. One was we said on the SPY and on the NASDAQ we had a head and shoulders pattern. We closed below that head and shoulders pattern on both of those things, signaling a short. Alright, and I'm going to show you guys that again. We're looking at the SPY today, intraday chart, 10-minute here, with our moving averages. As you guys know, I love these moving averages. And the other scenario was that you had the CPI this morning. The number, we don't believe in the number, and it would just be a simple fix, but we also thought the Fed might step up. In addition, we have options X. So the scenario we laid out yesterday was the market takes out the low, alright, we take out the low on the downside, and that signals on the ES futures it signaled we would go much lower, and thus signaling on the SPY and the NASDAQ as well. Well, what happened today? We had a push up right at the open, and right here, look at this, guys. Right here, and let me get my trend tools out so we can all do a little trend together. Alright, I'll move that out of the way. We saw a push up here. Took the market positive. Pull back, push up to a double top, and a drop. What pattern is this, guys? What pattern? We called this in the chat room. We said it was developing. We called it that it was a double top. And again, look at this. Double top. M pattern. M pattern is a bearish pattern, guys. All you have is that you have the M pattern, then you get an A, and then another roll down. Alright, we called this on the daily chart a while ago. You guys know we love these patterns. These technical patterns are so key in analyzing a market and understanding where a market's going to go. And we got it to a T. We got the M pattern, we got the double top. Right here when we didn't break out above the double top, it's a short signal, especially once we closed right below our moving averages right here, alright? When this candle came through, this direct candle, alright? Let me get some of these lines out of the way so we can actually see. When this candle came through, we pierced, we bounced above. When this one closed below both the 20 and the 50 moving average, that's a short signal, folks. That's a short. Right there. Right there is a short signal. You ride the market down all the way like that, right to the close, where we closed on the NASDAQ at the lows. Alright? M pattern, A pattern, bam. We're going lower, folks. We broke down today. We're going to see 60 to 80 point decline over the next week or so, taking us down to March lows now. And I hate to say it, guys, but the bloodbath, the reality of the situation here, this credit issue is not going away. Now, this doesn't mean the Fed won't step up again and try and prop this market up. But you guys know, and by now you guys probably say it in your sleep, the technicals tell the truth. The Fed can prop this market up. People can come out and say good things, and it might prop it up for an hour, 2 hours, a day, 2 days. But long story short, this market doesn't lie. The technicals don't lie. The market sees through all the hubbub, and we're going to go lower. Alright, what I want to show you here is the chart again. You see, this is right here. Right up here is where we called the short. We said market correction right in this area. We said market correction starting here soon. And look at this drop we got. And this, again, you guys can all view this in our daily report archive on our website. Go to June 20th, July 20th, check that, I apologize. July 20th, and you can see it. Look at the next wave down here. Boom, right down here. The key here was taking out this point right here. And let's just get a a little analysis in here. Alright, right here we added our 200, which is where we propped up here. Once that was broken, then we had a double bottom right here. Once that's taken out, it's all falling, guys. What I want to show you here, just to continue on this great technical analysis and making sure everyone fully understands, I'm going to show you the head and shoulders we pointed out yesterday. Alright, let me get rid of some of these candles again. These are little lines I drew in, and so we can all see it a little clearer. But really, what's going on here, guys, is we had a major breakdown in confirmation today. That was confirmation. Alright? Here we have a shoulder, head, shoulder. And this is what I pointed out in yesterday's video. So watch yesterday's video if you need confirmation on this. There's our line. Look at this. We got below right here. At this point, the close below on the 60-minute, or we're using 180-minute here to show you guys so we can all see it in the right time frame, is a short right there. And this is a major breakdown, guys. At some point, we'll get a little blip up, which will be the A pattern in this move down, and then we're going to go back lower. Alright, I'm going to show you this on the NASDAQ as well, on the comp. Same pattern. And this is, again, was shown yesterday as a breakdown pattern. We closed below. That signaled to short. We just didn't have ESU7 September contract confirmation. And the second we took out the low from yesterday, gave us confirmation that this market was going out. And that took out early this morning, and that signaled to us a short, and so it did. And look at this, guys. Head, shoulder, head, shoulder. You draw your trend line. A breakdown right here signals a short right down. Okay, folks? Head and shoulder patterns are great patterns. You guys should always be analyzing charts to find shoulders, head and shoulders, W patterns, M patterns, MA patterns, WV patterns, and so forth. Alright, now what I want to do is go into the ES chart because that's the clearest one to see. And we had, what I want to show here is we had this bottom here. Alright, and this is what we looked for yesterday at the break, and we closed right on the line. They actually closed it below the line at 4 o'clock yesterday, but remember, the ES futures trade till 4:15. And on that 4:15, that 15 minutes on light volume, they suckered the market up, got it to got it to get back to the line, right on the line. So they gave us a little pause. We thought, well, maybe the Fed's going to come out. Maybe the market will be propped up into options expiration on Friday. No way, guys. Any way you cut it, this market's dropping. It's going lower. This is where we ended today. It doesn't have a candle there yet because the ES candle doesn't show up. But this is the candle today, folks, alright? Right in here. This is the low, which we're closed down here. Alright? How perfect was this push up yesterday where we touched that line, sold off hard, or earlier where we sold off hard based on that 20 moving average right there. Alright? And the fact that we're below this line is a major rule breakdown in our vocabulary. It's a technical breakdown. We look for this all over the markets. The moves down once you break these trend lines that we have in here. Now, we're not going to divulge how we come to this trend line and how to know when it exactly it's... Because look here, it hit the trend line, broke up, but we knew that would happen. Alright, if you remember a while ago, we do call bounces in this market. Alright? But at a certain point, at a certain number of hits, the stock or the index will break lower. And that's when you get a big move down, a hard move down. Alright, folks. So, we're going to talk a little bit about where we see this market going, guys, because things are very ugly right now. Alright, let me just talk a little bit about what happened in the market here, and I'm going to go back to a 10-minute, because I want to really show you guys something interesting here. Alright, here's a 10-minute, and we'll get rid of these trend lines from earlier. And I want to show you guys here. You guys see this major sell-off here. First of all, notice this candle right here, alright? This candle, this one right here, alright? See how the wick forms above it and it closes in the lower half and it's a double top as well? Right there? That's a bearish signal, guys. You guys all should be recognizing that chart's intraday patterns and on daily and on monthly patterns. That's a dead sell signal. Alright? In addition, what happened here? Look at this sell-off. This was a steep sell-off, guys. We just got hammered down and hammered down again. And I want to show you what coincided with this. We look at countrywide. CFC, folks. Look at this chart. Right here it's trading. It's basically looking like it's making a little bottom. And then all of a sudden it starts to dump. And you literally have a dump from, what price is this here? $23-ish to $22.50 down to about the low of the day here, under $20. In a matter of 40 minutes, it just dumps $3. And what had happened was they came out with something about credit spreads and God knows what. Not a, who cares really what the news was? When it wasn't good, this is one of the major lenders out there. Major lenders. And again, it struck fear in the hearts. And this candle right here coincides exactly with the NASDAQ candle drop here, alright? We came down here, Countrywide comes out with his news, and boom, we get smacked down. Alright, folks, in any case, I've talked enough today. You guys know we've been predicting once we broke that line, alright, that line was broken early this morning, we're going to see 60 to 80 points on the downside on the S&P to the to the March lows. All right, that'll be the next area in that general vicinity is where we're going to get support again. All right, we got it. We already got a nice chunk of that. We already got a small portion of that move down today following that breakdown. And I hope some of you guys caught this on the downside. ETFs are great right now. All right, be careful going in at this point, but back 3 weeks ago when you could have bought QID for $40, that's the move right there, folks. It's near 50 now. Going to go over 50, probably to 55 when all is said and done. Maybe 60. We'll see. We've been calling for a 10 to 20% correction all along since we even called this before the market even corrected. Please understand we were right on here. Come join us. We'd love to have you aboard. We'd love to give you some good information. Take care. I'll talk to you guys tomorrow.